Good afternoon, and welcome to today's mCloud Technologies webcast as part of the Planet MicroCap Showcase. It is now my pleasure to turn the floor over to your host, Barry Poe of mCloud Technologies. Please go ahead.
Thank you very much, and good afternoon, everyone. I'm pleased to have a chance to share the mCloud story with everyone here today. Let me start by just saying that mCloud Technologies is one of Canada's fastest growing tech companies. We're really focused on applying IoT AI in the cloud to transform how energy intensive assets are managed. We have three distinct verticals in our business, one centered around commercial buildings, another centered around wind and renewables, and a third around process industries like oil and gas. And we've been growing really, really fast. We went public in 2017, really as a startup on the TSXV Venture Exchange and the OTCQB, and our annual revenues have grown 14 times since 2018, from only about 1.8 million in 2018 to approximately 27 million that we just reported for 2020. As a company, we've got a global presence, 300 employees in 7 countries around the world. And everything that we do at mCloud is really around unlocking the untapped potential of energy-intensive assets. And we use IoT AI in the cloud to optimize the performance of those assets. And so when we're talking about assets, we're talking about, one, equipment that consumes or produces lots of energy, and two, are essentially the pieces of equipment that are largely ignored or unmanaged today. So we see through this kind of ability to use IoT to inexpensively connect to a variety of different assets that allow us to tap into that opportunity to create new efficiencies that impact the bottom line of our customers. So if you take a look at what's on the right-hand side of this slide, you'll see that in buildings, what we call energy-intensive assets are things like HVAC, which drive indoor air quality, refrigeration and cold storage units. If you're in process industries like oil and gas, every oil and gas facility runs hundreds of heat exchangers and compressors, and there are hundreds of thousands of wind turbines all around the world. And it's really through our cloud platform that we call AssetCare that we get connected to all those assets. Today, we're connected to over 59,000 of these assets, and each one of these is a unit of recurring revenue for our business. And through AssetCare, the value loop that we create for every asset and every customer is the same. We're using those IoT sensors to inexpensively connect to these assets, collect data around asset health and performance data. All of that data goes into the cloud, where we use AI and machine learning to identify opportunities to optimize the performance and the cost efficiency of those assets. And then we take direct action to manage those assets and then drive results, either using AI to directly guide control of the asset remotely, or using AI to guide the actions of the workers who operate these assets in the field through a collection of mobile apps. And as a result, AssetCare actually allows us to uniquely access these assets at scale in a way that traditional enterprise asset management has typically not been able to take advantage of, because the cost of getting connected to these assets has traditionally been too high. And the bottom line is that as a result of being able to connect to all of these undermanaged or unmanaged assets, we're able to go and find opportunities that drive bottom line results for our customers. So things like lower energy costs or better operating expenses or optimal production, these are the kinds of bottom line results that we're able to provide to our customers through that remote connectivity to those kinds of assets. I'll just go through a few different examples in each of the 3 verticals that I talked about around how AssetCare is applied today. In the commercial building space, we're using AssetCare to target over 7 million facilities in a bid to reduce their kilowatt-hour consumption and ensure the health and safety of the air that people are breathing inside these buildings. So in these buildings, we're targeting 40% of the ongoing cost of energy that typically goes to waste in these buildings, and looking at how we can optimize the HVAC systems that are in these buildings to prevent the spread of contaminants and infectious diseases. And so through the use of AI and IoT, we're reducing the cost of customers' energy bill. We're ensuring that they're automatically compliant with health and safety regulations for air quality. And we're assuring these safety-conscious customers that may be part of these buildings that they're in a safe space, which is huge, especially in kind of the wake of COVID-19. If you take a look at what's on the right-hand side of the slide, you can actually see here some real customer data that comes from an implementation of AssetCare kind of before and after. And so, the yellow line that you see on that slide is really the the health authority mandated level of which contaminants are allowed to be present in a building. And we might all be surprised to kind of see the level of contaminants that exist in the air that we breathe in the buildings that we tend to be in. And really what we do through AssetCare is take these contaminant levels, which are often well above the levels of that are kind of required by any health or safety standard, and we're able to bring them well into the range of what is safe and healthy for people inside that building. And we're doing all of that through that combination of IoT, AI, and the cloud. And so, some of you who may have just been doing a little bit of research into us will have probably seen a press release that we just put out this morning. We announced a trio of partnerships with major utilities across Canada and the U.S. And these partnerships are going to let us make these building solutions available to about 1 million buildings through utility-sponsored incentives that are designed to modernize the energy efficiency of all these different buildings around the world and all these different places. And really what that does for us is that simplifies the buying process for these customers who want to take AssetCare into their business. And in the same way that we're delivering value for building operators, we're doing the same for industries like oil and gas, where we're applying our technology to reduce harmful emissions and reduce the carbon footprint of oil and gas assets. And so those of you who have been keeping track of the oil and gas sector know that oil and gas tends to be viewed as one of the highest risk industries for environmental, social, and corporate governance, so ESG type standing. And what we're really looking at is ways in which we can apply our technology to help these companies improve their standing by looking at ways in which we can reduce the carbon footprint of these production assets that they have out in the field. And so, there's been a lot of research that talks about where a lot of the harmful emissions that come out of oil and gas, where they come from. And what you see on the left-hand side of the slide is some research that was done by McKinsey, which shows that about half of all of the greenhouse gas emissions in oil and gas come from undetected methane leaks or flaring events that happen when an oil and gas facility goes offline. So one of the ways in which we are applying our technology within sectors like oil and gas is using mobile IoT to equip every worker in these facilities with the ability to automatically monitor gas leaks. So what that allows us to do is reduce the time that's needed to detect methane leaks from 3 months on average to less than 24 hours. And the delta between that 3 months and 24 hours is how we create hard greenhouse gas reductions for these customers. So that's really the direct benefit to the customer when we're applying this whole kind of AssetCare formula within oil and gas, is using down direct emissions through the use of early warning and early detection in these facilities. And in wind, it's very much the same story, where we're applying AI and analytics to monitor every aspect of a wind turbine's performance, including the condition of its blades, to identify places where blown wind isn't actually being converted into energy. And through this, in the same way that we've done it in oil and gas, in the same way that we're doing it in commercial buildings, we're using AI to identify those opportunities where a wind turbine could be optimized and how direct action could be taken on the wind turbines as assets to optimize the energy that individual wind turbines produce. And so for us in this space, it's really about maximizing kilowatt hour energy creation as a result of being connected to these wind turbines. mCloud today, if you take a look at the market that we're in, we are in a $24 billion serviceable obtainable market. And today, that means that we have the ability to reach a market of approximately 24 million connectable assets, about 2 million connectable workers. And again, each one of those is a recurring unit of revenue that's potential revenue for the company. There we go. What we're showing here on this slide is our business model, which is based on commercial software as a service. And as I mentioned, every connectable asset in our world is a unit of SaaS, where companies pay a fixed monthly fee for every connection over the course of a multi-year contract. The contracts, from our perspective, are typically 36 months. We even have some customers who are signed up for as much as 10 years. And what that allows us to create is a highly recurring, highly sticky customer revenue base, where again, when you take kind of the total of 59,000 assets under management and take the total of all those assets multiplied by the value for each connected asset, you'd get a pretty good sense of mCloud's annual revenues. The value per connected asset differs a little bit depending on class. For instance, if you're looking at an HVAC unit, that might be about $50 a month over a 36-month term, while if you take a look at an oil and gas asset in that other pillar of our business, like an artificial lift system or a heat exchanger, you might be looking at a value per connected asset that would be up to 5 times that. Since going public, mCloud has signed up over 100 marquee enterprise customers, including name brands that I'm sure many of you recognize across retail, financial services, major utilities, oil and gas, and energy. And these customers and more are what make up our portfolio of the over 59,000 assets that we're connected to today. To take just one example, Bank of America is one of mCloud's enterprise customers, where they have our HVAC and building solution deployed across all 3,300 branches in the United States. It's a really good example of the AssetCare model taken to scale. So chances are when you're going into a Bank of America branch in the United States today, you're actually being taken care of with AssetCare in the background. And it's through the use of our technology that the Bank of America team is driving about 12% improvements in their operational efficiencies of how they manage these bank branches, which is the equivalent of about $40 million in direct value to them every year. So as a SaaS company, we keep a pretty close eye on all the traditional SaaS metrics that track our sales and revenue performance. The bottom line is that we have a very sticky customer base, and you can see that in our net dollar and gross dollar retention figures. Our LTV to CAC ratio of 3.2 times puts us kind of in the above average range of performers. We definitely have our sights to improve upon that to be best in class. We have a pretty good win-loss ratio. Some of that's kind of an artifact of COVID and what's happened in the last year. We have had a lot of success in the past year growing our business within our existing accounts. Again, a kind of a testament of our stickiness and our ability to grow customer value. Once we're connected to a set of assets in a company, there's an opportunity for us to connect to even more until we're kind of fully penetrated inside an organization. So one of the things that we have in mind is, as we take on new logos and new customers, is building upon within these kind of customer accounts to grow our asset base and grow the number of recurring asset subscriptions that we gain from those customers. In our backlog and pipeline today, we have a combined $178 million in that combined backlog and pipeline. That positions us well for our growth this year. And for reference, about 84% of our customer lifetime value today comes from our top 25 customers. What I'd just like to show you here is how we've grown recurring revenues organically. And, by and large, all of the revenue that we've generated by way of AssetCare comes from kind of organically generated business. We've grown about 3.3 times year over year, about 35% sequentially quarter over quarter. And it's this kind of pattern of continued growth in our recurring revenue base that we're focused on driving. And every single time that we connect to a new asset, we're adding to that recurring revenue base. This is another view that shows the same kind of picture. As a SaaS company, we have some revenues that are attributed to onboarding that fit into one of 3 buckets, this kind of AssetCare initialization bucket. And we have some proportion of our revenues from contracted professional services and engineering work, with the bulk of our revenues now coming from this recurring revenue that we're generating from ongoing subscriptions. And so over the past year, we've really seen our SaaS strategy start to show some of that longer-term benefit, with over 80% of our annual revenues in the past year coming from those recurring revenues, and with a 62% gross margin, which is kind of in the gross margin profile of between 60 to 65%, which we're looking to maintain and sustain on a long-term basis. Now, just being mindful of time, I just want to wrap up here by highlighting a few key reasons why mCloud is poised for high growth as we go forward. The first of which is in the incredible leadership team we have at mCloud. We're literally drawn from every corner of high tech, energy, and finance. mCloud CEO Russ McMeekin, he's a former president of Honeywell's Advanced Software Division. He's had serial success, having taken many companies to successful exits over the course of his career. One of our other co-founders, Tino Lanza, is a former Exxon executive. Our CTO, Jim Christian, also former Honeywell and Siemens. I personally have a PhD in computer science. I've led international teams at brands that include HSBC, Nokia, and I come to mCloud by way of mCloud's acquisition of my last company, Engrain, which was really focused in aerospace and defense. And the bottom line really is that we're an incredibly experienced, diverse leadership team. We understand the markets that we're in, and we've been in those markets for many years, and we know how to create successful companies. One other thing I'd like to point out is, some of the recent progress that we've made, some of the announcements that we've made earlier this year. In February, we announced a partnership with the province of Alberta through one of their crown corporations called Invest Alberta, which we're very excited about. What this partnership means to mCloud and to all of us here is that the province has really partnered with mCloud to lead the way in driving ESG and the decarbonization of oil and gas within the province. And so through the use of AI, we're really set to become a tech leader in the province that's focused on modernizing the industry and creating new pathways for growth and looking for what the kind of next generation of oil and gas looks like in the context of themes like ESG. I mentioned a little earlier that mCloud already has over 59,000 assets under management. We are on track to hit 70,000 assets sometime in the middle of this year. That's a milestone that relates when we expect to be at a point at which, operating cash flows are going to be kind of EBITDA neutral, heading toward positive. And we've got a plan that continues on from there that's going to get us to 100,000 plus toward the end of the year. And, I'd just like to maybe end here with this kind of last slide, which kind of gives a little bit of a sense of our own kind of longer-term 5-year horizon and a sense of that bigger picture. We have in our sights a goal of connecting 500,000 assets, which, if we go back to take a look at the 24 million connectable assets I talked about a little while ago, that's just 2% of our serviceable obtainable market, which would really enable mCloud to drive $400 million in annual revenues on an ongoing basis. So the bottom line is that we're really just at the start of this very exciting journey. And, I think with that in mind, I'll kind of pause and thank everyone for sharing your time with us today. We'll definitely welcome any questions that we have here in the time remaining.
Hello, Barry. This is Wayne Andrews here, and we do have a few questions that have come in. If you're ready, maybe we can take one. The first being, what are the most important challenges you face connecting more assets per quarter or per fiscal year? And that may require just some discussion on who are our competitors and what are we looking forward to as far as connecting additional assets in the coming year?
Sure. It's a great question. And, I'll kind of tackle the first part of that question first, Wayne. Around the most important challenges we face in getting more assets connected, really good sales performance is key. All of our growth continues to be organic. So how do we continue to grow our presence and our visibility within the existing accounts that we have? How do we get out in front of new logos? Those are going to be key to us. So good sales performance and, a high performing sales team, that's going to be kind of one of the keys for us being successful, from that perspective. I think now that we've got enough momentum and enough velocity, we've got great technology and our timing is perfect, especially in the context of how everyone's coming out of COVID. Now that we've got reopening in place, we've got a pretty big opportunity to get out in front of a lot of these businesses that are concerned about how they're going to attract customers back into their spaces, customers and employees back into their spaces. And there are lots of places where, especially in heavy industry, a lot of these businesses who may have neglected a lot of their infrastructure as a result of not being able to be on site during COVID, they're kind of now asking the question of how can they do things differently, knowing that they're not going to have the same kind of foot traffic and presence on site that they used to have, and yet still need to keep all of these production assets operational. So those are going to be some of the opportunities, and really the underlying challenge for us is getting out to all of these different opportunities, winning their confidence, and then closing those deals. That's going to be kind of key from that perspective. Wayne, I think the second part of your question was centered around competition. Is that right?
Yes, somewhat, and really kind of how we differentiate ourselves from the competition.
Right on. Okay, so from a competition point of view, we definitely look at some of the incumbent hardware providers. The folks like Honeywell and Siemens as being potential competitors to us. They're kind of the bastion of the old world that continues to persist within asset management. So they're definitely competitors in their own right. Then we've got comparables. If you take a look at companies like C3.ai or AspenTech, there are a few companies out there that have taken kind of AI and IoT very seriously as they look at ways in which they can bring AI to these organizations, kind of from a top-down perspective. So, their view is how do you adopt AI across an organization to drive data-driven decisions? And that is actually where we really differentiate ourselves. We don't really have a top-down view of winning an organization in one fell swoop. The sales cycles for that are really long. It could be like 24 to 36 months before you win an organization, if you win them and you earn the credibility with them to go forward with an initiative. What we're doing is totally different. So we kind of approach it from the perspective of how do we get connected at the sub-asset level, the individual pieces of equipment, and winning those individual pieces of equipment, initially to prove value and then to grow to win a facility and then a whole portfolio of facilities. We kind of look at that as the kind of scale that we're looking to create when we go out and engage with customers. So that's kind of one of the key differentiators, is our ability to target assets technologically at that sub-asset level, and then also having the business model and the sales approach that gets us out in front of those assets.
Yeah, and I might add to that. I mean, a lot of our competitors require significant capital investment up front to upgrade systems. That's not our model. We come in with a subscription-based revenue that makes a very easier decision-making process. Would you agree with that, Barry?
Absolutely. Yeah, the subscription model is key. So we're not looking to tap into a customer's capital expenditure budget. We know that everyone's CapEx is highly constrained, especially in the conditions that we're in. What we're really looking to do is to look at ways in which we can help these customers better invest their OpEx in a way that's going to drive better operating performance. And so everything that we do is connected to that very measurable business case. You pay a monthly fee per connected asset, and we know that as a result of getting connected, you're going to get X dollars of value out as a result of that subscription.
Great. Hey, Barry, now I'm looking at several questions that sort of revolve around our announcement this morning that we partnered with 3 separate North American utilities. And those questions regarding how do we work with them, what are the logistics involved there, and I have a follow-up question after that.
Okay, sounds good. Well, the utilities announcement is actually really, really exciting. So, I mentioned a little bit earlier that one of the things that we announced in today is that we're partnering with 3 major utilities in North America that are going to help support through utility incentive programs our ability to get in front of many potential connectable buildings. And so the logistics for it are actually pretty straightforward. These utilities have actually set aside a budget for us to be able to go in and provide to these customers who want to sign up for AssetCare. They'll get an incentive based on their ability to modernize their infrastructure to drive better energy efficiency and energy savings. So, in exchange for signing up for AssetCare, there's going to be an incentive direct to the customer that either offsets the subscription cost or discounts the subscription cost for the customer. So it goes directly to the customer. It doesn't impact our own revenues. It just means that we've got the support of these utility providers to help us get out in front of these customers and make the buying decision even simpler for them.
Sounds like a better solution than rolling blackouts.
Yeah, definitely. We can be smarter than that because we've got AI.
Great. Hey, I see another question, and it's something that we talk about quite often, but maybe some investors don't understand the significance. We're sort of asking about digital twins and facilities and how do those twins with their operations through a digital twin.
So if I understand you correctly, Wayne, like the question is, how can we help them with digital twins?
Yeah, and maybe even just a little bit on what is it exactly. And we have, essentially a digital twin. You can have a mathematical model or a 3D digitized model, and both are useful depending on the case. But a lot of our oil and gas customers in particular find that digital twins can be very helpful for them, and maybe you can elaborate a little on that.
Absolutely. So, the word digital twin is one that you'll come across if you take a look at, what's being talked about in the industry. And so, what we do is every single time we get connected to an asset, we create a digital twin of that asset in the cloud. And a digital twin is really a digital replica of every facet of that asset. So we know how that asset performs, how it operates, how it's been maintained. We keep a record of everyone who's touched that asset. We also kind of, in certain cases, take 3D scans of those assets, so we've actually got a visual record of what the asset looks like and the condition that it's in. And that digital twin is essentially the basis of what we apply AI and machine learning to, because we're now able to use that digital twin as the basis for doing mathematical modeling on that asset to create opportunities and identify places where the asset is performing suboptimally. And so with that digital twin coupled with AI, we're able to identify places where the asset could be performing better if certain actions were taken. And that's really what we do with these digital twins, whether they're 3D or they're kind of more numerical in nature, is we're using that information to help guide businesses and help businesses take action on their assets in a way that we know is going to drive them better performance and better bottom line results.
Very good. And thanks for that explanation, Barry. And it looks to me like we're bumping up on the end of our time here, so might be worthwhile. I'll say my name is Wayne Andrews. I work in investor relations for mCloud. I'd be glad to answer any additional questions and put you in touch with guys like Barry if we need any deeper dives. But just wanted to make sure you're all aware that we're available and we'd like to answer any additional questions that come up. And if you want any closing remarks from you, Barry.
Oh, no, all good. Thank you very much, everyone, for taking a little bit of time here. As Wayne said, please feel free to reach out to us anytime. We'd be more than happy to dig a little bit more into the details around the mCloud story.
Great. Thank you, Barry, and thank you all for listening. And thank you, moderator. Bye-bye.
Thank you. This does conclude today's webcast. Thank you for your participation and have a wonderful day.